Hey, how we doing? How we doing? It's 2 o'clock live. We're ready for 2 o'clock live. Don't know where I put my phone. Oh, there it is. So that way we could maybe put up and be ready for be ready with the Instagram. I didn't set it up and I'm not going to work that now. I should have done it ahead of time, but I was really trying to get my cameras and stuff to work properly. Okay, so today's topic is covered calls. We're going to finish covered calls. Well, not really finish. We're going to talk about the steps for doing covered calls. Going to go through the steps for selling covered calls. This is the second half of the wheel strategy. The wheel strategy includes selling puts. You sell puts, yes. And then if and when you get assigned the shares, then you take your shares, your 100 shares at the price you sold puts at. Then you sell covered calls against those same shares, collecting premiums. Yep. Hey, Miss Deborah. Hey, Cynthia. Collecting premiums against those shares that you own. That is your asset. And then if at some point the shares get called away, then you go ahead and you start the process all over again. All over again. Let me tell the folks in my community that I am live. Nope, that's not what I'm live doing. Educator2Trader. There we go. I believe we're live. We're live at Educator2Trader. Yes, we are in our window of space and time. I believe that's where we are. Okay. So, I think I've shared. Please, y'all share the word, pass the content out to your friends and say, my friend Arlissa, or this girl Arlissa, this lady Arlissa, whatever. Don't call me bad names, but this person, Arlissa, is out here coaching and teaching about selling options. That's what we're doing. Have you all watched the market today? That's a good question. Have you all looked at the market today to see what is the price doing in the market today? Looking at, when I say the market, I'm saying SPX, I'm saying XSP, I'm saying SPY. When I say the market, I'm talking about the S&P 500 market, because those are the ones, the stocks that are basically moving things around. All the things inside of the S&P 500 is what we trade on a daily basis, XSP and SPX. And some people trade the SPY. We traded SPY for a long time. I traded SPY a long time. What made me made me switch over from SPY to XSP is the fact that XSP is cash settled. Okay, I'm slowing down to say that, so because the X always gets caught. If I talk fast, it goes out fast. SPY and XSP are very, very similar, if not the same thing. XSP is the mini SPX, and it is cash settled. What does cash settled mean? That means that at the end of the day, if your trade is in the money, if you're a buyer, let me clarify. If you're a buyer and your trade is in the money, the broker will give you your money. If you're a buyer and your trade is out of the money, they'll basically, keep whatever was paid. Right? If you paid $20 for out of the money call and it's not in the money at the end of the day, then they'll basically keep the $20. Hey, Adrian. If you're a seller and your trade is out of the money at the end of the day, that means you're keeping your premiums. The broker's just going to leave you with your money. If at the end of the day and you're a seller and your trade is in the money, the broker's going to take the money that they deserve and they're going to keep that. So there's no shares. When it says it's cash settled, there's no shares that you got to worry about changing hands. No exercising, no none of that. And at 4 o'clock, it all stops. Shh. SPY, on the other hand, continues 4:15, 4:30, 5 o'clock. SPY, I believe, can be traded around the clock. So the price of your trades, if you've got credit spreads, If the broker feels like the risk management shows that it may breach your strike or whatever, your trade that might have been a good trade at 4 o'clock, the broker will say, it's a little close, and they'll shut off your trade. So you can end up getting charged a day trade for something that's not really a day trade, right? But that's not what we're talking about today. We're talking about covered calls. Talking about what are our steps for covered calls. But I wanted to talk about why do we do SPX and XSP instead. Now, we love SPX and XSP, especially XSP, because it's a one spread on credit spreads. Maybe one of these weeks or one of these, not one of these weeks. I'm not doing, this is our last week for 2 o'clock live. So I hope everybody's okay with that. Arlissa's going to take a little bit of a break. But the credit spreads for XSP is a one spread. So they require only $100 of collateral in order for you to generate 10% return, at least 10% return on your money every single day. At least 10% return. And if you're concerned about how to do that, you can look at that along the bottom of the ticker. You see that the SPX for daily profits, that also includes XSP. So if you want to get a better understanding of how to make money with XSP and SPX every single day, then you need to hop in on that training, so that way you can see what that includes. All right. I believe it's just SPX training. Maybe it's bit.ly/XSP training, or SPX training. You can see it's coming actually right under me right now. It's coming in and talking about that. So if that's something you're interested in doing, which who wouldn't be interested in making money every single day, right? Then you want to hop in on that. Let's talk about covered calls. Let me share my screen so we can talk covered calls, because that is the topic for today, is covered calls. Covered calls, I call it one of the most passive strategies, and that is because it doesn't require much watching at all. Very little watching, very little setup, very little planning, and these are straightforward, right? Selling puts, we talked about Monday and Tuesday. If you didn't see that, please go back and find those videos on the YouTube channel. Speaking of YouTube channels, if you're hanging out with me, go ahead and subscribe. Please pass the word, tell your friends, but go ahead and subscribe to the channel. That way you don't miss anything. When we talk, when I talk, you talk, everybody can hear what's being said. Go ahead and do that, okay? Subscribe to the channel, because we want to pass the word, not just because I want to grow subscribers, but because we want to pass the word. That's really where we're going with that. So you want to hear the steps on the screen for steps for selling covered calls. It's a great way to grow a small account. This whole wheel strategy, which we've talked about the last several days, is a great way to grow a small account, just to get your feet into the market. If you don't have a lot of time, and or you don't have a lot of money, and or you don't have a lot of understanding of options, these are three things you can do. These are two things you can do, because they're very easy to understand. I had one young lady as one of the comments on one of the YouTube videos. She said, I'm interested in learning, but I would need to be making money while I'm learning. And that's real. You want to be making money while you're learning. I'm all for that. So what my suggestion to her was to pick one of these strategies, like selling puts or selling covered calls, or the both of those together, and use that strategy and rinse and repeat it while you learn and expand your knowledge. The good thing about these two strategies is they're very straightforward. You can learn them quickly and then start to use them almost immediately. All righty. For selling covered calls, first thing we're going to do is you're going to find a stock that you're going to use. You may already own 100 shares. I talked about that a little bit yesterday. If you already own the 100 shares, then you just need to sell the covered calls above what you paid for them. But if you're starting basically from scratch and you don't really know, then what you want to do is find a stock. We're going to look at the screener. We use bar chart. We're going to look at the screener and see if we can find some opportunities to sell covered calls. Then you want to select a strike above what you paid for the shares. Select the strike above what you paid for the shares. And then you're going to want to place the trade. collect your premiums, and then close it on your own. One thing I probably should add to this is once you find the stock, you need to buy 100 shares. That's an important step, huh? I think that's an important step that once you find the stock, you need to buy 100 shares. If you don't already have 100 shares, you have to buy 100 shares. I probably should have put that as the next step. There is you need to buy 100 shares. That's what you need to do there. That's an important piece of information. Right. Maybe I'll go and fix that real quick. So that way we can say you need to own the 100 shares, which means if you don't have them already, you have to buy them. But you want to buy an asset. This is where you're you're acquiring an asset that is going to be something that you'll have from that point forward until you either release them, you sell them, which you can do that. You can decide you're going to sell them whenever you're ready. Whenever you're ready. I'm looking at the screen so I can see the one that talks about that step, because I feel like that's an important step. What y'all think? You have to buy the 100 shares as an important step. Buy 100 shares. I don't know how I left that step off, right? That's important. You got to figure out, you just can't jump in there and not have them. You got to have the shares in order to do that with, right? Yes, that's the way that goes. Come on, come on. That's the way that goes. Here we go. I'm going to put that graphic back up here again. Once I get it downloaded once again, I'll make sure that we have that next step there, because that's an important step. A quite important step that you need to buy the 100 shares. Okay, so we're going to look at the screener, looking for covered calls. I'm going to show you that in just 1 second. You're going to buy the 100 shares of the one that you decide. You're going to buy 100 shares. Then you're going to select a strike above what you paid for those shares, right? And then you're going to collect your 10% collateral, or collect your 10% premiums on that collateral. Now I need to move this to where I can't see it now. This is no bueno. I got a way to fix that. I got a way to fix it. There we go. So many screens. Got the screens here. Can y'all see? There we go. Looks like it's coming on in. There we go. We're going to find a stock, buy the 100 shares, select the strike above what you paid for the shares, place the trade, collect premiums of at least 10%, and then close on your own, or you can just let it expire. This is the part that doesn't require any watching. You literally can just leave it to run its course and let it expire. If it expires higher than what you paid for it, then that's great, because you're going to get a profit. And if it expires with the price below that, then you keep your shares and you rinse and repeat. That's how that goes. All right, let's go look at our bar chart. Let's go see if we can find our screener. There we go. I went to barchart.com again, right? I went to the covered call screener. You pick options, you pick covered calls. This is the covered calls screener that shows up. Again, depending on what time of day, there may be some different things that pop up here. I really don't have an idea of what criteria they use to suggest them, but this is what's suggested on the free version. If you want to get the paid version of bar chart, you can do that, and then you can do more with the filters and move things around a little bit. At this point, the free one works for me, but I have had the paid version, and it does have a lot of opportunity, a lot of things there that you can use that can benefit you. I looked earlier, and I looked at GRTX. GRTX is Galera Therapeutics. That's not the one I looked at. I must have looked at QBTS, because it was one of those. There we go. D-Wave Quantum. Not sure what they're all about, but I always go and look under. Okay, let's go real quick. I go to QBTS. I click the plus button right here, and then I look under opinion. This is the analyst. What are all the analysts saying? And short-term, medium-term, long-term indicators. They got a 70% buy rating, which is a strong buy. The reason you want to pick one that says strong buy is you're buying 100 shares. So you don't want to buy 100 shares and it has a strong sale, which means the analysts are saying you should get rid of it. That's not what we want. We want strong buy. So we want the shares to be going upward, or at least, not selling. We want them to be flat or going up. So let's look at, this is QBTS. Now what bar chart does is they even suggest the strike for you. The current price of the shares are here, $2.10. They suggest 250 as your strike. They suggest you an expiration date. Actually, you can go, they got them listed twice. QBTS is listed 2 times for 8/18 or 9/15. I like to do selling as close as possible. I want to get about 20% return on my money though, right? So all the things, the debit, what's it going to cost you, all those things are all written across on bar chart. So let's go. We're doing QBTS. QBTS is what we're looking at on here. Now you can check the chart if you'd like. Nothing's wrong with checking a chart. We like to do that, right? So this is the daily chart for QBTS. It shows you what it's been doing at this point. It's been having a little bit of an upward ride. This is good. For those who are of interest, if you're interested, you might want to know what do they do. If you're selling for income, you may not be as concerned about, what it is that they do, as long as they, don't affect any of your convictions. You kind of want to have a general idea. But they've been on an uphill ride since about May of this year, right? Since about May, they've been going up. QBTS, we would then buy 100 shares. How do we buy 100 shares? You can pick the BA up here. This is Thinkorswim. If you have a different broker, you might want to know, how do you buy 100 shares? But if you select in this where it says bid and ask, that's what those two are. And you're going to buy 100 shares. I think you can also pick inside the chart and it'll do the same thing. But I like to do the B&A because that way it pops up. It automatically populates with 100 shares. It says you're going to buy 100 shares of this stock at $2.11. I might change it to $2.10 just so we can see. When you're going to buy 100 shares at $2.10, it means you're going to spend $210. Buying power effect, $210. That means that's how much you're going to pay for your 100 shares. You're going to buy 100 shares at $2.10, which is $210. Yes, you're buying an asset that the analyst has said they believe is going to go up. Hey, Saida, they believe it's going up. So you want to, make sure that you got an asset that's growing or increasing, not picking one that's supposedly on the downhill ride. All righty, let's see. I don't think it's picked up yet. We may have to switch our thing to 211 so I can continue on with the training. Or it looks like it's at 210 now. It might pick up here in a second. When you're looking here, the price I asked for 210, it's currently marked at 210.01. It should go ahead and give me my shares at this rate, right? Should go ahead and give me the shares. Give them to me. Let me do a cancel and replace real quick. Sometimes when it doesn't pick up fast enough for me, I'll do a cancel replace, which is basically just putting the order back in again. Come on, give me the money. Give me what I want. We want it to come on, Cletus. Give it to me quicker. I'm ready. It's going really slow though. That may be what's happening. It's taking a little minute processing the live. It's processing my conversation with you all. It's keeping that chart up and running. It's keeping Thinkorswim running and the data up. I switched it to $2.11. Okay. I wanted to show you all that. We talked yesterday, though, while we wait for that to do its thing, we paid, just picked up, okay? So it says that we paid $2.11. I hope y'all can all hear me. I have the speaker muted, which means I can't hear, but that doesn't mean you can't hear me, right? I figured if y'all couldn't hear me, somebody would have said something by now. So we just traded. We bought 100 shares of QBTS. It showed up down here in our list of positions, QBTS. Here we can drop down this drop box and it tells us we have 100 shares at 211. The current price is 211, right? Then now that we have our 100 shares, we want to go and do we want to sell a covered call. You can sell the covered call immediately. You can wait to see, is it going to be fine today, tomorrow? Do we want to go ahead and collect our monies? Either way, I'm fine. I'm a fan of going ahead and knocking it out while I'm already here. So we're looking at August the 18th. I need a few, though that doesn't have any more strikes. 2.5 is the strike we're shooting for because we bought it for 211. 2.5 is what we want, right? We're on the call side. We're doing a covered call. So we would go to the bid column, which is where we go as a seller, and we would select this. We would collect $20. We're collecting $20 in order to run this trade. And what this is saying is, if on August 18th, the price is above $2.50, then we will release our shares, the shares we just bought. We bought them for $2.11, right? If the price is above $2.50, we will release them for $2.50 per share, right? Which is another, $39 of profit we will make if it's above $2.50, plus the $20 we just pulled in premiums. So that would be $59 of profits. If the price on August 18th is not above $2.50, we'll still keep the $20 we got for our premiums, and we will be ready to sell another covered call. That covered call will expire worthless. We will keep our shares, and we can sell another covered call for the next period of time, whether that's the next month. Looks like QBTS only has monthly expirations. I'm cool with monthlies, but I really like the weeklies. Personally, I want to be able to pick from week to week. So now let's go look. We put that in for QBTS. Let's go look at what other one we could potentially do that's maybe a weekly, right? Tilray, I think Tilray shows up as a buy. Oh, nope, showed up at a week sale. I'm trying to remember which ones. I was just here. Fubo and Nicola both show up as strong buys, but they also have earnings on Friday. So I'm not suggesting that anybody purchase shares just before earnings, because earnings means the price can go either way. It can go up generally. Fubo and Nicola both have a buy rating on them. See, Fubo has a strong buy. Nicola, we talked about the other day, also has a strong buy, but they got earnings coming up. So I would leave them alone till after earnings. But let's look at HUT. This is HUT Mining. This has to do with Bitcoin. It's a mining company. It's a strong buy as well. Let's look at HUT. I want to see, I don't remember if HUT has weekly options. If they go weekly. Yes, it does. Look at there, child. HUT has weekly. Oh, I want to show y'all one more thing before we left HUT. HUT is the price is $326, right? So if you bought your 100 shares, it's going to cost you $326. 326 times 100. Okay. Hello, Kenyan boy. How you doing? You would sell the strike of covered call for a 4 strike. And if you did it for $9.15, you're going to collect $25. All righty. If you went out that far, let's see what we got going. Here. Back to, we would have to buy our 100 shares. But before we buy them, let's go look at the premiums for covered calls, because you may decide that for the $326 you're going to pay for shares, that it's not going to return your collateral for you quickly. But this is another thought, okay? Because all these thoughts come up when you're buying these shares. Are you one who has a strong conviction in the in the crypto space? And if you know about HUT Mining or HUT 8 Mining, and you know that they're a company, you feel like a company that's going to continue to grow, then having your 100 shares again is an asset. If you're, dead set against the crypto space, then this isn't a thing you want to trade, right? You want to trade what's going to generate you resources and doesn't go against your convictions. If you believe it's going to be growing, then let's go get some money off it, right? So if you bought it at $327, you need to be above that. So let's say you'd have to go to the $350 or the $4 strike price For this week, there's no money there. Let's look at the 11th. At the 3.5 strike, that will be $12 in premiums you take in. Means if you release them, you would also take in $23 of profits and keep your money for your premiums. August the 18th is paying $20 in premium for the 3.5 strike. The 4 strike is paying $10. I don't like to go out too many weeks, 2-3 weeks at the most. It's kind of where I would want to go. 3.5 is paying $26. Okay. I would probably go back to the 18th. This isn't quite giving you the 10% return you'd want to have on your collateral. But again, this comes down to how you feel about HUT mining and collecting your premiums and setting it up for a good return on your money. I like Nicola. I like I think Tupperware. Tupperware seemed to was dropping a little bit this morning. Maybe it's recovered some, but I want to show you the process, right? So let's look. We're going to buy our 100 shares first. We haven't done that yet. Let's go buy our 100 shares. These are the steps. You buy your 100 shares. If you need to, feel some conviction about HUT 8 mining, you're going to spend $328 on 100 shares. Confirm and send it. Tells to your buying power effect here because margin's going to kick in on buying the shares. If you have a margin account, the margin will share the load with you. But if you don't want to use that, make sure that you watch that because the margin will kick in to help. And then you'll be using margin money too. So we just bought them for $328. We bought the shares for $328. And then we're going to go to the August 18th is where I am. I'm going to do the 3.5 strike. This 3.5 strike says I'm doing a covered call. I'm on the call side, selling calls. Hey, Anthony, selling calls for $350. You see, this is the $350 price. You want to sell calls higher than what you paid for them, so that if the shares get called away, then you're going to have a profit from them getting called away. You don't want to sell at a strike lower than what you paid for them. You buy them at one price and you do a covered call above that price. Okay. I know I feel like I'm repeating some of these same things, but sometimes hearing it multiple times makes it stick. Right. So you're now selling a covered call for $350. If at the end of August the 18th, price is above $350, the broker is going to take your shares, give you $350. You paid $328. So you're going to get the $22 of profits plus the $20 you got here. So you're going to have $42 in profits from that trade. If on August the 18th, the price is not above $350, you will keep the premiums you collected and you will keep your shares. Either way, you're going to come out with a benefit. You're still going to have the shares and the money, or you're going to have the money and then more extra from selling your shares for a profit. Either way, you're going to end up with money and or an asset. All righty. That was the 2. We got to wait for that one to pick up to see what goes on there. If there are covered call questions, please make sure to ask them in the chat, in the little comments. The steps. You want to find a stock using a screener. We use bar chart. There's other screeners, not just the only one. I believe Robinhood has a screener and some other people have screeners too. You're looking for a covered call screener. You don't have to pay any money for that unless you want to. If you want to pay for a screener, you definitely can. Then you want to buy the 100 shares, right? Buy 100 shares. Select a strike above what you paid for them. Place your trade on the call side. Call bid. We're bidders. We're sellers. Collect your premiums. Try to get to at least 10% of your collateral. And then let the time go on. Either you close it on your own if you want, or you can let it expire at the end of the time. Really up to you. Okay, really up to you. Don't you dare. My microphone's trying to act like it wants to come off the stand. Don't you do it. Not in the middle of our call. That would be horrible. That would be horrible when the equipment don't act right. The strike price was for which one, Michelle? The strike price for the what were we looking at? HUT. The strike price for HUT was 3.5. I did 3.5. You could do 3.5 or 4. Either one of those would work. I'm interested in where Tupperware is right now. Oh, $3.60. It's come on back and recovered a bit, right? 360. Where was it this morning? Was it 360 or 380 yesterday? Trying to remember what yesterday looked like, but let me see. I think we gotta. Oh, I'm not sharing. I want to share so you all can see too. Come on. There we go. Present. Share my screen. Oh, there's got to be a way for this to be like an automatic without me having to push all these same buttons. This is the Tupperware chart we're looking at. Yeah, Tupperware's got a green day going. A lot of things have a green day going. Yeah, 350 was for Hut. If you were looking at the Hut trade I was just doing the example of, 350 was the covered call strike for Hut because you bought the shares. We bought the shares for $3.28. So we could do the $3.50 covered call for a week or 2 weeks. It wasn't going to return the 10% in 2 weeks. You may have to go a little further if you want the 10%, but $20 in 2 weeks, and you would have the $22 of premium profits if it went above 350. This is Tupperware. We were talking about Tupperware yesterday. I believe we talked about Tupperware yesterday. This is what's going on with it today. It's got a little green thing going. Tupperware was really offering really good premiums on the call side. If you were to buy it for $3.60 at the $4 covered call, it's paying $45 in a week. So let's say you bought 100 shares of Tupperware for $3.60. You could do a covered call for $4 for August the 11th and take $45 in premiums. That says if the price goes up above $4, you're willing to release your shares for $4 and you paid $3.60. If it doesn't go above $4, then you're just going to keep the premiums you received and you're going to keep your shares. You know, I really didn't know Tupperware was still around for a long time. And I definitely didn't know they had premiums looking like this. I did not know. How do it know? Okay, you bought Tup for $3.30. So your shares are up, Michelle. If you bought them for $3.33, your shares are up, and you can be doing a covered call on the $3.50 or the $4. You can do the $4 or $3.50. Actually, don't do $3.50 because it's above that price now. So do the $4 covered call, collect your $45, and be in good shape. All righty. All right. We covered calls. We covered calls. You see what I did there? We did that today. Covered calls today. We did covered calls today and yesterday. I walked you through the steps of how to actually do a covered call, right? Do you all agree that it's pretty straightforward? If you agree that the steps for a covered call are pretty straightforward, put yes. If you don't agree, of course, you can say no. I don't agree. It's not easy. No, and no. If you agree, put yes into the chat that says, yes, I agree that it's pretty straightforward. Step, and then you're good to go. Yes, it's 3 or 4 steps and you're good. All right. So if you're here hanging out at the channel, then go ahead and subscribe and pass the word to your friends, please. All right. Pass the word to the people. I see some yeps and some yeppers. I love it. Still learning. Yeah, Miss Leona, it's always still, we're all continuing to learn, to be honest. And some of these things, you hear it more and more, it starts to kick in. But if you're a newbie, I suggest you lean into selling puts and you lean into selling covered calls. That wheel strategy, you can run that and never run anything else. And you can run the wheel strategy from now on, grow your account nicely in a steady manner, and really come out and just continue to grow and grow, rinse and repeat, right? And as you get more and more money, then you start doing more expensive stocks where you can get out of the penny stocks. The penny stocks are the ones under $10. But listen, I don't know what anybody's resources are. You may be able to jump to something in the 12, 13, 14, like Mara and Ryder in the $14, $15 range. And those provide good premiums. You don't even have to wait to get out of the penny stocks. You can jump on out of the penny stocks for now. You can jump straight out. Or you can start small and grow it, and go from there. If you've got $1,000 or $1,500 that you can use, the selling puts and selling covered calls is a way to go. You can start right there. All right. If you're not sure about more specifics, along the bottom, you probably have seen the comments in the chat that said that you can do the wheel strategy. That's what this is. If you need more training on that, you feel like you need something more that's more than my 35-minute YouTube video, then go ahead and get in on the E2T/wheel strategy. I believe it says is the link. I think it's written in along the bottom. Bit.ly. Nope, I'm not in the comments. Let me get to the comments area so that I can put it there. I believe it's the bit.ly E2T-wheel strategy. That way you can study it in your own time and space. You can have it repeat and repeat. You can stop and rewind. You can push the buttons on your screen same time I'm saying the different stuff, and it can be a much closer bit of learning. And you can be trading this tomorrow. Listen, these are very straightforward strategies, and you could be using them almost immediately. If you're interested, join our Facebook group. Our Facebook group is Educator2Trader. On Facebook, you can find me there. You can find me on Instagram. You can find me on TikTok. Jay Klein has a question. Opinion only. Would you roll a put out a few weeks that is below the strike price today, expiration tomorrow, instead of the assignment or selling covered calls? Okay. So, again, none of this stuff I ever talk about is investment advice, because I am not an investment advisor. None of those things. All I'm trying to do is help the people. Just trying to help the people. You could roll it out if you feel like it just needs more time to go up. You can roll it out. Just keep in mind, when you're rolling a trade, what you're really doing is you're closing the current trade and you're starting another one. So when you roll, you definitely want to roll for a profit. So if you're going to roll it out, so you need to have two thoughts here. One of them is you really do believe the price is going to go up above your strike, right? And if you can roll out for a profit, out, down, you can roll places, you can roll out and down, you can move it, but you want to do that for a profit. If not, just pay to buy it back. If you don't want the shares, right? If you don't want the shares, you can just pay what it's worth and buy your way out. You don't have to wait to see. You can buy your way out. If you don't want to do shares, you don't want to do covered calls on that particular stock, you can buy your way out, or you can roll out and down, or just out in time. If you think it's going to recover in price, if it will go above your strike price in time, then you can just roll out the date. But again, don't roll for a loss. You might as well just close it. If you're going to have a loss, you might as well have the loss today versus you lost, in 3 or 4 weeks or 2 or 3 weeks. Right? That's a good question. Good question. Just remember that rolling is closing one and opening another one. It's almost like a whole new trade. It's just they let you do it all in one motion. It almost sounds like, oh yeah, I could just roll it and it won't. No, you're basically buying it back. You're closing the first trade by buying it back, and you're entering the next trade immediately in the same transaction is all you're doing. So you're actually closing what you currently have. You're just buying the next thing. But if you feel like it's not going to do that, just close it and be done with it. Go on to the next thing or whatever. All right. The E2T membership, every morning we meet for our calls. We have a pre-market call, talks about what's coming in the market. What do we think is happening? We also have an exclusive Telegram group where everybody continues to talk and to work on their trades together. And they're together. We have a virtual power hour. We have bi-weekly coaching twice a month. We do coaching on Saturday, which this coming Saturday, we're actually doing how do we trade SPX for weekly expirations and get, the most out of our premium. That's going to be our discussion topic this week. But that all happens within the membership. All right. We have that. If you're interested in that, you can definitely go to educator2trader.com, educator2trader.com, and you can check out the membership. It's the first icon. All righty. So in this community, we do two things. What do? Hey, we stay green and we get this money. All righty. I'm going to see you all tomorrow. All right. Put in the chat if you got some covered calls you end up doing. Put them in the comments so I can see what you're doing. All righty. I'll talk to you all later. Bye.